What's up, guys? Just waiting for everybody to jump on the feed right now. Sent out a notification. We'll be starting shortly. All of the markets are not moving a lot. See what we can pick out. See what trades we can find tonight. All right. How's everybody doing? Hope everyone's doing well. I actually think the markets are moving a little bit slow right now because we got a lot of data coming out. 8:30 a.m. Eastern Standard Time or 5:30 a.m. Pacific Time. We're going to have quite a few piece of data coming out from the U.S. markets, which is going to affect the U.S. dollar significantly. And we should get some good movement. We should get some good movement during the U.S. session. All right. Now let me just drop the. I'm gonna take a look at Euro USD first. Let me just take a look here. I'm gonna actually let me get rid of these. Actually, you know what? This fib level is still okay. Although I'm going to get rid of it, and I'm going to focus a bit more on naked charts for a second. Let me just get rid of. Let me get rid of all these lines so we can kind of assess it together. So the first thing I'm going to do is I'm going to go on a daily chart. And guys, remember, when you want to draw your trend lines, when you start your trend lines, remember, the biggest thing you want to do, the most accurate way of analyzing any chart or any specific market is you want to start at the beginning of the week. Now, Sunday evenings, I strongly advise for you not to jump into trades during the Sunday evening open. And I'll tell you why. The reason is the markets have just opened. There's still a little bit of, indecision from the Friday close, and new data is going to come out. Every week has a new flavor. Although the markets will always move within their respective direction, you're going to get every single week offering a new flavor. And by that, I essentially mean that the markets are going to have their own direction. You kind of got to look at every week like an entirely new trade setup, all right? Even though the markets are going to be moving alongside their respective trends, every single week when the markets start, you should really take a look at it as in you're starting fresh, brand new. All right. Now, what I like to do is I like to invest my Sundays, which, would have been yesterday. I like to invest my Sundays really just taking a look at charts. If need be, if the markets have moved a significant amount, I like to go back to my chart, maybe even delete my old trend lines and start off fresh with analysis. And the first thing you want to do is, and you should do this every week, I'm being dead serious, it's going to make your life a lot easier. Start right off with the weekly, right? Go right to the weekly charts and any relevant piece of information. So any price points that are relevant. So by that, I mean support and resistance levels. Anything you see relevant, start plotting it out. So obviously we don't care about drawing trend lines across here because that's at the 124 level. That's, it's just not going to go there anytime soon. So there's no point, right? But what we are going to do is look at the relevant area. And by relevant area, I'm saying create like a 200 pip radius and just focus on that. Focus on like a 200 to a 150, 200 pip radius. and start plotting that area out. All right. So what I'm going to do, first thing I'm going to do is I'm going to go on a weekly chart and I'm going to take a look at the overall direction of the market. All right. When you look at it on a weekly, you can gauge the overall trend of the market. And you really want to do that with every pair. And the reason for that is simple. All right. If you don't gauge the charts on a weekly, daily, or monthly time frame, you're not really going to know the direction of the markets. For example, I'm looking at this on a weekly, and it's extremely bearish. Extremely bearish. Even though on a 1 hour, it is so bullish, right? So if you start analyzing on a 1 hour chart, or even a 4 hour chart, or some people like to look at these lower time frames and start their initial analysis based on those, you're going to get the complete wrong direction of the market. And that doesn't mean your trend lines are no good. That doesn't mean this is no good, all right? It doesn't mean this is not a good trend line, because it is, right? But if you don't know the actual true direction of the market, you're not going to know where the sentiment lies. And what is vitally important is to know where the sentiment of the market lies. You need to know the direction the markets are going into, because the institutional traders, and I'm talking the big dogs, these are the banks, these are the hedge fund managers, these are the guys that are banking millions and millions of dollars on these positions. If you don't know the true sentiment, you're not going to know where they are projecting the markets to go. And furthermore, you're not going to know where they want the markets to go. And that's important, because remember, projecting and wanting are two completely different things. All right? Like it or not, believe it or not, the markets are always going to get pulled into a specific area where the institutional traders want it to go. Remember, there's trillions of dollars being transacted every single day. The big dogs are taking a nice percentage of that. So naturally, if they have positions situated within current or specific areas of the market, believe me, they're going to drive the prices there. And if they start driving prices, guess what happens? Well, retail traders catch on to that. And when retail traders catch on to that, they start driving the markets for them, and the institutional guys sit back and collect their profits. Let me give you an example. Let's say that there is, $2 trillion worth of trades, short on the euro at 109.49. Let's say at 109.49, there's $2 trillion that's short. Now the price is 111. All right. You better believe that banks are not going to get liquidated. They're not going to get stop lossed out, right? They hold their positions. They play their positions differently. Do you understand what I mean? So these guys are all holding a short here, let's say, all right? Now, all the retail traders saw this big move, and they're like, damn, let's start buying the Euro USD. Now, if the retail traders continue to pack on long positions, although they're not as strong as the institutional traders, they are going to be able to prolong this pair moving downwards. Furthermore, they might actually create further highs, because they're going based on their technical analysis, and they're going based on what their account sizes are. So you're going to get retail packing on, and it can leave institutions at a major loss. For example, Bank of America might go and buy billions and billions and billions of dollars worth of the euro at 109, or sell it at 109.46. Right now they're sitting with all this money. As they start selling this money at current levels, right, they're going to lose money. Do you understand? If they liquidate at current levels, they're going to start losing money. Now, do they really have an option or choice to not liquidate? They don't, because as customers come in and they exchange currencies, they're going to be presented with this situation. So here's what can oftentimes happen. All right. And this is how institutions really go ahead and control what happens, and retail traders, market traders get stuck and lose money. What happens is if they're net short at 109.49, or let's just say 109.50 for argument's sakes, right? And price is driven up here. Now, they're not going to engage in selling, but they can create a catalyst. Now, how do retail traders trade? The retail market, you, I, everyone around us that we know, we see a direction, boom, we go in it. News comes out, euro tanks, hey, psychologically, we got to sell. News comes out, euro goes up, hey, psychologically, we got to buy because we go in the direction of the trend. We want to capitalize on the trade. So what do they do? All right, these guys come in and they do one of few things. The first thing they can do is manipulate the news, which is very easy to do, right? CPI comes out, consumer confidence comes out, bam. They manipulate the news to what they want. They move the market where they want. The other way is they can place large orders, all right? And this is what happens. This is what ends up happening. They can come out and place one large order or manipulate the news. And all of a sudden, the euro drops from 111.03 to 110.47 or 110.30. It'll drop 70, 60, 80 pips. Now, that is the cost of doing business for them. Because you know what's going to happen next? You guys, myself included, and all the retail guys are going to say, damn, the euro just dropped. So now we're going to start all offloading our buy positions and start selling the euro. And guess what happens? We start driving the price down for the banks. So now they kind of manipulated us into positioning ourselves on their side of the market. What starts happening? They create a little catalyst. Retail traders get on the ship. We start driving the price downwards. They get into a better position because now we start driving at 200 pips downwards because we're selling. When it hits 108.47, the banks cash out and make a ton of money. Now we're down here at the lows, all right, saying, hey, it's going to break lower. News comes out, it goes 400 pips higher because you know why? Now the banks start loading up positions down here and buying it. So this is a lot of major factors people don't know, right? People don't know. This is a lot of major factors, and this is why I always tell people, all right, make sure you assess and analyze based on the overall trend of the market and get an idea and scope of where the prices are going. So by starting on a weekly time frame, what am I doing? I'm looking at the overall picture, and the overall picture, I don't care if this is gone from 105.17 up to 111. I don't care. You understand what I mean? This is a big move, right? But this 700 pip move, 800 pip move is nothing, right? I'm not going to look at that and say, let me start packing on positions. I'm going to look at the overall picture. So you start on a weekly time frame. Let's zoom it in and let's start plotting out the major levels of support and resistance. And the first place I see is right there, right underneath this blue candle. Why did I start there? Because I like to start from left to right. Okay, just to organize myself, I'm going to start from left to right. And that is my first major level. Now, is there a level up here? Sure there is, but that's 114. And I don't need to plot it because I don't think prices are going to go up there. Right? So I plot that level. The next thing I'm going to do is come and plot this level here. All right? Because that's another significant level. Now, on a weekly time frame, I think I've done enough. I put two lines out there, and you can right away see why did this price reverse here? Because you got that major weekly support and resistance level. All right? So we go ahead and we assess that. Now on a weekly time frame, right? Other thing we start doing is we start panning out our trend lines. And we find relevant trend lines by looking for highs, lower highs, or lows, lower lows, you know, higher highs, higher lows. And I'm going to draw one right here. This is a pretty significant line right there. I think you can all agree. Okay. Another one I'm going to draw is right over here. And I'm going to actually accurately connect this. Make it as accurate as possible. Remember, you wanted to touch the bodies, right? Now, what I'd like to do is if I have only a few candles touching, it's okay on a weekly time frame. On a 1 hour, 15 minute, 4 hour, I wouldn't recommend to use minimal candle touches, but on a weekly time frame, it's okay. Now what I'm going to do is once that got is connected, I'm just going to extend this and see if it touches anything. And look at that. As I extend this out, I'm only looking, look, I'm only looking over here. I'm making sure as I extend this that these candles are still 100% in line with this trend line. And then I'm going to follow this up and see, does it do anything at all? And lo and behold, look right here. It actually separates a gap that has not been closed. So that should show you how significant this trend line is. So I draw these trend lines on a weekly, boom. And that's all I need to do. I've right away dissected this entire area. Now you go on a daily time frame, all right? Now you go on a daily time frame and you start doing the exact same thing. You don't want to pollute your charts with too many trend lines, but you go ahead and you insert your trend lines where you seem relevant compared to current price action, right? And I'm going to put one there. And I'm going to go ahead and put one right here as well. And you can see how well it's intersecting these areas. All right? You can see how well it's intersecting the areas. Another thing I'm going to do is add this trend line here. Right? Now I've made this level even tighter. Now I've made this level even tighter. These trend lines I'm drawing, guys, you can bank heavily on them, all right? Because they're on major time frames, okay? So let me zoom back out. On a weekly, I made a triangle. On a daily, I made that triangle even tighter. Now I'm really getting within the confines of price action with respect to the euro. And I'm going to even add another trend line right here at 110.24. Is it that significant? It's not, but you know what? I'm looking here. I got candles. I got protection. Hey, it looks good to me. From here, once you've got your major trend lines and you've identified based on a weekly chart that, listen, this is overall bearish. All right? Overall, this is bearish. All right? No matter what, I'm looking to short. I'm looking to sell. Now, in the event that we break through these levels, we know that now we can start buying. But as long as we're below this major trend line on a weekly, we really haven't broken into bullish territory. We've broken into bullish territory on shorter time frames, but on an overall image, if you want to take a wide angle zoom of this, you're not bullish at all. You're quite bearish. Price action is going as planned. So now you can get it on a 4-hour time frame and start preparing your trade, right? What are we going to do? First thing we're going to do is we're going to highly respect these trend lines. We're going to know that these trend lines are solid levels of support and resistance. However, guys, pay very close attention to what I'm about to tell you, because this is a major mistake and misconception that a lot of traders make as well. Although these trend lines are extremely powerful, remember, we drew them on daily and weekly time frames. What does that mean? That means it takes X amount of 4-hour candles to create a daily candle or a weekly candle. So you can get fake outs, all right, such as these fake outs here. So your best entry on the major trend lines is to always use them on their respective time frames. So the way you use them is the moment you see price approaching these levels, you know price is sitting on those trend lines. Drop it on the time frame. For example, the daily closes above this trend line, you buy it. It touches this and closes, you buy it. Doesn't matter. You don't look at the fake out, right? We gotta plan for the fake out. Okay? So now that we're on a 4-hour time frame, okay, in fact, if you do a good job analyzing everything, you don't even need to analyze a 4-hour. You can go straight to a 1-hour. But I'm gonna go on a 4-hour now. And guys, as much as some of you might think this is tedious, this is your ticket to becoming wealthy in this market. All right? Believe me, as much as you might think, hey, Reza, this is tedious, I gotta draw all these trend lines, my chart's gonna look like doo-doo. Guess what? If looking like doo-doo is gonna make you a lot of money, who cares? Right? So I'm gonna draw this trend line as well. And the second I drew that, it kind of gave me an idea of what's going on here. Right? It gave me an idea of what's going on here. So now I'm looking for this pair, the Euro USD, essentially to break below this trend line for me to start selling it. All right, that's what I'm going to look for. I'm going to look for a break to start selling it. All right, or I got a trade already right here for you. All right, and this is how I put out my trades. You know, again, when I'm feeling good and I'm hitting my trades at 99%, this is how I put them out. I create these lines, and look, I got one for you right here. Look at this. Right in the middle of this trend line and this horizontal line and this trend line, right below the daily R1, I'm gonna sell there, and I'm gonna target down. I really don't care because my risk to reward is so good. My risk to reward ratio is so damn solid, right? I'm looking at multiple levels of support and resistance. All right. I did put this line slightly up. I did put my entry slightly above the 111.41 handle. Why? Why did I do that? Someone tell me why I put my entry slightly above the 111.41. It's a great shorting area, but why did I put my entry slightly above that level? Why did I not say let's enter the moment it touches it? Let's see how many people have been listening to exactly what I've been saying. I want to see how many people get this, all right? And if you said because that's a daily trend line, you're bang on, all right? Remember, that trend line was drawn on a daily time frame. What did I tell you? If you draw a trend line on a daily time frame, it is absolutely okay for the pair to shoot outside of it on a smaller time frame. Observe these candles here and look at it on a daily. Do you see how the daily, that same trend line, no candle fake outs, no fake outs at all, right? It's holding intact. So by setting my sell zone slightly above it, I'm actually kind of confirming a solid entry. Plus, I'm also allowing individuals that are a little bit, shy and timid when it comes to minor drawdowns, enter the trade with a bit more confidence, because if they do enter it right on a trend line and they go in a bit of a drawdown, they're going to panic. Now, again, there's nothing wrong with a drawdown. Drawdowns are understandable. And if you start drawing your trend lines the way I'm teaching you, starting from the weekly time frames, you'll avoid those drawdowns. Why? Because when you enter a trade, you can also observe it on a weekly time frame. So let's say, for example, the trade has popped outside of a trend line and you're short, and now you're in a 25 pip drawdown, but you drop it on a weekly and daily time frame, and it shows that, hey, even though it has popped out on an hourly, this sure as hell has not broken it on a main time frame. So I'm not going to prematurely close my trade. I'm going to hold it. And that gives you the added confidence to hold your position. All right? That will give you the added confidence to hold your position. So right off the bat, I'm going to put this trade out for you guys. All right? which is taking a short position at 111.48. So at 111.48, I'm going to look to sell this pair. All right. Now, I need to make sure, guys, that a 1 hour candle closes below this level. All right. It closes below this level. Now, I've seen somebody mentioning that Elliott waves are a great way to go. Elliott waves are a fantastic way to go. All right. And I'm going to do an in-depth class for you guys with respect to Elliott waves this week and explain to you the wave counts. But let me explain something to you. If you know how to draw trend lines properly, all right, and if you know how to do naked price action, there is nothing on this planet better than price action trading. Price action trading is the real deal. All right. So based on the analysis I've given you, all right, right off the bat, all right, we're looking at a nice sell position on the Euro USD. All right. Right off the bat, I'm looking at a nice sell position on the Euro USD. Now, in the event that this pair breaks downwards and it does not reach these levels, well, I have another trade for you. Okay? I have another trade for you. Because we could always wait for this pair to also break down. I would break right below this level. And then just wait for a retest. And my retest would be, I'll show you where. All right? And I would aim downwards. My retest would be right around the 110.88. Why did I choose the 110.88? I'll show you. Because if we break down towards this level, we've compromised this trend line. But if you look down here, see this red candle, blue candle, red candle, blue candle. They've created an almost virtual support and resistance. It's not a solid support and resistance level, but it's a virtual support and resistance, which means if prices break down towards here, this area is going to hold some degree of weight. And that's going to be my entry point because I'd rather get in than miss the trade completely. So in the event that this pair breaks downwards, I can always wait for a retest and take a short at around the 1088, 1090 level. All right. So on both sides, I'm catching the trade. And again, if you pay attention to these schematics, you can enter multiple trades on a daily basis. You will really not worry about missing a trade because there's always a trading opportunity, guys. That's the beautiful thing about Forex. There is always, always, always a trading opportunity. There's never a time, unless the markets are going completely sideways, where there is no trading opportunity. All right? And that's what you need to understand. So based on that analysis, I'm looking to sell the Euro USD based on two different positions. All right? Very simple setup. I've analyzed it right from the weekly down to the daily, down to the 4 hour, and right down to the 1 hour. All right, and there it is on a 15-minute time frame. There it is on a 15-minute time frame. All right. Now, let's see if the pound USD presents any opportunities, and it does. So we're going to go once again. We're going to clear all the objects out of here. Now, again, I'm starting back with you guys with the same methods I essentially started with on Periscope when we first started trading together. So I'm going to ease you guys into the trades. I don't want to throw 50 trades out at you. You know, back in the day, I used to do 2 or 3 trades max, and we'd catch them overnight. So let's go and take a look at the pound USD again, guys. I mean, look at that. How much more bearish do you want it to be? Right? I mean, how much more bearish do you want it to be? And look, right off the bat, on a weekly, there's a major trend line. Right? There's a major trend line. Doesn't matter if you want to use Fibonacci's, forks, Elliott waves, what is going to argue against this trend line? If it breaks it, it broke it. It's going higher. You buy it. End of story. There's no argument. There's no debate. There's no strategy. There's no indicator. It is what it is. Price action. If it breaks above it, hey, you're going to buy it on the retest. If it touches it and fails, hey, you're going to sell it. There's, it's black and white. Black and white. Simple, right? So that's the only thing I'm going to put there. That's all I care about to see right now. However, check this out. If I go and I drag this out, what do I see? I see a nice trend line, a juicy trend line that is pretty relevant. All right? Look how gorgeous that is on a weekly time frame. How much more power do you want? Right? So if it goes up 140 pips or 120 pips anytime soon, you got one hell of a selling opportunity. So let's go on a daily time frame and take a look at it. You can see on a daily, you got the fake outs, right? And look at them. Look how beautiful this is. Look how beautiful this is. Because this is a weekly trend line, even though it broke it on a daily time frame, it did not respect it. Do you see that? Look, it broke it here. Clearly broke it, but no respect for it. So if you had sold it here and it went upward, you're panicking. You're down 40, 50 pips. But if you understood this, you would have held it and could have made 500 pips. You understand? This is why it's so important to do long-term analysis. All right? So the same way I do that trend line, I'm going to come on a daily time frame now, and I'm going to go ahead and I'm just going to extend from here. And I'm going to connect this level as well, because I got a good trend line here that is accurate. And furthermore, right over there, right there is an SNR, which, look at it, it's breaking it already. So now I'm going to go on a 4-hour time frame. All right, it's been going on 1 hour. It's going to 4 hour. Okay, is there a trend line here? There's a semi-decent trend line right over there, and all of a sudden GBP USD has broken through everything, and it's pretty clear what it's doing, right? So again, what am I going to do? I'm going to look for selling opportunities here. Okay, I'm going to look for selling opportunities here. In fact, I already have an aggressive setup and I have a conservative setup. Okay, and first thing I'm going to do is I'm going to look to sell this pair. I got to sell it. I mean, risk to reward ratio, my sell is always going to be better than my buy, right? Based on the factors, based on all the variables, my sell is always going to be better than my buy. All right, so I'm going to draw this trend line as well. Okay, and I'm going to play two plays here. Two very simple plays. Okay, on an aggressive position, I'm going to wait for a 1 hour candle to break this completely. All right, I'm going to wait for a retest back up to the same area, and I'm going to sell it. And I'm just going to target right down to the daily S1. That's going to be my aggressive play. Alternatively, I'm going to just sell it on a pull back up to this level. Wait for a pull back upwards and target down the exact same line. You guys see what I did there? You guys see how I protected myself on all avenues of the trade? Well protected, trade is timed properly, analyzed on a weekly, daily time frame, and perfect setup. All right? And look, it's trying to break it right now. So I'll either wait for it to break this level and then sell it at the 142.59 handle, All right? Or wait for it to pull up towards the 142.92 and sell it. And no matter what, my risk to reward, and see how it's panning out already as I'm speaking to you guys, how it's dropping. So no matter what, my risk to reward ratio is good. And in the event, guys, in the event that you did sell it here or you sold it and it went up a bit against you, you're still bearish because you're protected by this line. All right? And you're much better off selling this pair rather than buying it. Are you going to get times and events where you take the perfect selling opportunity and it goes against you? Yes, you are. We don't live in a perfect world. All right? We don't live in a perfect world. It's going to happen. But are you going to worry? So what? You take a loss. I guarantee you, if you assess, analyze, and do your due diligence the way I just shown you, you are going to win 90% of the time. You're all intelligent people. You're all logical people. Look at how I just analyzed these charts. You know yourself that you're going to win 90% of the time if you analyze like this. Because even if you're wrong 10% of the time, you're only wrong because the market literally defied technical analysis. And when can that happen? Let's get to that right now. Well, if news comes out, it can break technicals. All right. If a major market move occurs, it can break technicals. Those two events can defy all of this. So how do we protect our downside and how do we protect ourselves from making those errors? Well, very simple. Don't trade during the news unless you're planning on becoming a news trader. And if you are, there's an entirely different strategy for trading the news. If you're trading the news, you're not going to assess and analyze the way I just did. In fact, you're not going to assess or analyze, period. You're going to set up an OCO and you're going to pick the news apart. So you're not going to trade these during the news. You're not going to trade 20 minutes before the news, and don't trade 20 minutes after the news. You have 24 hours in a day. All right? 24 hours in one day. Of those 24 hours, maybe 1 hour of them is gone towards news. You still have 23 hours to execute perfect trades based on proper technical analysis. All right? Perfect, right? Common sense. Don't put yourself in a position where you can get bit. You're not going to go and walk up to a tree with a wasp nest and lie down underneath it and shake the tree and think you're not going to get stung. Well, you're going to get stung. If you want to go lie down under the tree, go to a tree that doesn't have a wasp nest on top. You know, don't expose yourself to dangers if you're worried about taking a loss. It's common sense. A lot of traders become greedy because they see a perfect trade setup, and although they know news is about to hit, greed kicks in and says, you know what, let me try it anyways. You know, let me just try it. It's probably going to go in my direction. And guess what? If it goes in your direction 3 times out of 5, you're going to get greedy and you're going to get bit really hard on the next trade. And you're going to be in the chat room complaining, saying, oh my God, I lost my account. And when people ask you what happened, you're going to say, well, the news screwed me up. And I'm going to turn around and say, well, didn't I tell you not to jump in during the news? And you're going to have no answer to that. You're going to have absolutely no answer to that. Right? I'm giving you all the guidelines. I'm giving you all the logic. I'm giving you all the proper methods, which no one else teaches. No one teaches this stuff. I know for a 120% fact, no one teaches these methods. Just one of these sessions that I do for you guys is equivalent to almost an entire course that some people offer. Just one of these sessions is equivalent to an entire course of learning. So just follow the strategies. Now, you want to talk about stop losses? No problem. Let's talk about stop losses. everyone knows what I suggest. I always suggest setting your stop loss around 10 pips above or below the next major swing high or swing low. And the reason for that is because if it breaks the swing high or swing low, the trade is no good anyways. No reason to chase it because it broke the swing high or it broke the swing low. There's a behavioral change in the market. Therefore, we might even turn around and go the opposite direction. Now, any trade we take based on this strategy could be a long-term hold. So you could hold this trade for 100 pips, 200 pips, as long as you move your stop losses to break even or have a trailing stop set in place so you're protecting your profits at all time. Now, my suggestion always is to take your profits. I say 15 to 20 pips. When I'm bagging 15 or 20 pips, I'm taking that money and I'm out of here. All right? 15 to 20 pips, I'm taking that money and I'm out. I don't really care if it was going to go 150 pips. Hey, it looks great to make 150 pips, but it looks a lot better to make 10 trades at 15 pips each and show 10 profitable trades making 150 pips. Because if I see a guy consistently making 150 pips per trade, you know what I say? I say that's a guy that's too risky. That's a guy that marries his trades. That's a guy that doesn't know how to control emotions. And that's a guy that's going to end up losing all his money in the long run. I'd rather see a guy consistently taking 15, 20, 15, 20, 15, 20. I know that person is not greedy. I know that person understands risk management. I know that person understands the value of a dollar. And that's the kind of trader I want to see. And that's the kind of trader who's going to become successful in the long run. All right? That's the person that's going to be successful in the long run and make money over time, because it's a lot better to continuously hit first base runs than try to hit a home run every time. Because guess what? If you keep getting your batters onto a base, you're eventually going to bring everybody home. All right? Everyone is going to come home eventually. One by one, all the batters are going to run in. But if you stand there and continuously try to hit a home run, guess what's going to happen? You're going to strike out 4 or 5 guys before you hit that home run. All right? Very simple logic. Just got to use it. All right? Just got to use it. A lot of money can be easily made. You just got to use proper logic. All right? Everybody understand that? And remember, guys, I scalp. I'm telling you, the scalping method of trading works wonderfully. All right? Scalping works great. Master scalping before you start swinging. All right? Master the art of scalping, because if you learn to scalp, and if you learn to understand how to enter and exit markets, you'll become a lot more comfortable when you're swing trading. All right? And your trades will just become overall a lot more accurate, and you'll understand the markets a lot more. All right? Swing trading is great. I'll get into that as well. All right? I'll get into that. But I'm telling you, 99% of traders, including you guys, who are all young adults who are just getting into the markets, and you want that adrenaline rush, you want that bang, you're going to enjoy the scalping method a lot more. And I'm just being honest with you. You're going to enjoy scalping a lot more. And the reason is you got more action, more action, more action, right? The more action you get, the more experience you get, the more market time you get. It's just like being a pilot, right? The more hours you have up in the air, the better you're going to get over time. By taking a swing trade, and I'll tell you why I never advise brand new traders to start swing trading. I'll tell you why, and right away you're going to understand. Right away it's going to make full sense to you. All right, you ready for this? You ready for this? The reason I don't advise anyone that is brand new to trading to start swing trading is this. Swing trades can last a day or two. Swing trades last a while. Now, if you're holding on to one trade every 2 days even, all right, how much experience are you going to get? You're not going to get market time. You're going to enter a trade and sit back. All right, you're going to enter a trade and sit back. How much in and out time are you going to get, especially if you're trading on a demo account? If you're trading on a demo account, now you've limited yourself. You're getting into you're going to get to 3-4 trades a week maximum. Maximum 3 trades a week, 4 trades a week. How much experience are you going to get? How much time are you going to get to see what happens when news comes out? What happens when support and resistance is hit? What happens when a Fibonacci level is hit? What happens when a pivot point is hit? You're not going to get that experience. You're not going to go through all the emotions. You're not going to go through all the driving factors of price action. So you're not going to learn as fast. So it's always better to start learning to scalp, get into the markets, more frequent trades. You're going to lose some, win some, lose some, win some, break even on some trades. Overall, if you follow my method, you're going to win 90% of the time, but at the end of the day, you're going to get more air miles. And all you want is those air miles, right? The more air miles you rack up, the quicker you're going to get a free paid vacation. Think about it, right? The quicker you learn, the more you submerge yourself, and the more activity, the faster you're going to learn to make money. All right? So with that being said, check out those 2 trades I put out for you guys. All right? Check out those 2 trades I put out for you guys. Monitor those 2 trades for now. All right, let's keep an eye on them. Let's keep an eye on these 2 trades. Let's execute with precision, making sure that we're waiting for the proper candles to close. All right, now I'm going to get this video up on the archives as soon as possible, all right, for individuals to view it. So keep your eyes on these 2 trades. You got 2 signals out right now that are based on a overall look and perspective of the market, analyzing it based on price action or support and resistance levels, and entering based on confluence areas or solid levels of support and resistance. But make sure that you listen to every single word that I said. As long as you listen to everything that I said, you are going to be successful. If you ever fail in this industry, it's because you learned a little and then try to teach yourself a lot. All right? Learn as much as you can from the individuals who do this on a daily basis and have made a living doing this. And I'm telling you, you're going to thank yourself. You're not going to regret it. All right, guys? That being said, guys, I'll catch you guys on the next session. I love you guys. Thank you for joining me on the session tonight. Good luck on the trade. Let's make some money. Pound is dropping. Hopefully it closes. Retest. We can take that short position. All right? And don't be afraid of a little drawdown. It happens. As long as you enter your trade properly, you execute properly, you're going to continuously hit those one base runs. All your batters are going to come in, baby, and you're going to win the game. All right? I love you guys. I'll talk to you guys soon. Cheers, guys.